My next guest, I'd like to call him a friend, a colleague, a mentor, an educator, and author, investor, and deeply knowledgeable. I know some of you met him last night and over the last couple of days. Matthew Merle, I think you're on your fifth book now, right? With Allison.
A bit more than that.
So, okay, more than 5 books. How many books now?
Doesn't matter.
Okay, it doesn't matter. But I want him to take the floor with us and talk about what you want to talk about.
Thank you, Karim.
Thank you.
So Karim told me that my job is to warm up the crowd because Let There Be Change is derived from his favorite band, AC/DC, Let There Be Rock. And so I am the opening act and I'm going to warm you up. And I'm going to do that for a couple of reasons. One is obviously we want to all be engaged, but the other is that at breakfast, Garda and Omar were complaining that there's no gym at the hotel. And so I'm going to get you a good workout in the next 30 minutes, and I'm using full time, so it will be 30 minutes. Now, in order to get this started, I want to hear, what city are we in? Come on, that was awful. Come on, we're working the vocal cords now. What city are we in?
Cascais.
Right. Put your hand up if you know we're in Portugal. Come on, Lisa, put your hand up. We're in Portugal. All right. God, you didn't put your hand up. This is for you to get your fitness in. And what year is it? Shout out what year it is. 2022, and we'll come back to that at the end. So I'm going to cover 3 topics. The first is, what's the biggest single problem in the global wealth industry? The second is, why did we pivot Linqto into solving that issue? And the third is, what's going to happen next at Linqto? And to get started, put your hand up if you've ever spoken to a wealth advisor, a broker, an RIA, a private bank, a high net worth group, a Merrill Lynch. Put your hand up. All of you have your hands up. Of course, we've all spoken to those people. And put your hand up if the conversation at some point touched upon portfolio theory, optimum portfolio, portfolio allocation, the optimum frontier, how you should invest your money. Put your hands up. You've all got your hands up because it's always part of the conversation. And no doubt by the end of that conversation, you got a recommendation. And early on, depending upon your circumstance, early on that recommendation would have been 60% public equities, roughly 30 to 40% fixed income, and a small allocation for something called alternatives. And it turns out that over the last 25 years, the return of the public equities would have been about 10%. The return of the fixed income would have been 3 to 4%. And the alternatives that they offered you would have mostly been hedge funds or large cap real estate. The hedge funds would have been permutations and combinations of public equities and fixed income with additional costs. And the average hedge fund destroys value, returns less than the S&P 500. So what you actually would have ended up with is a weighted return after their costs of maybe 6%, 7 if you were lucky. And that is what they would have recommended globally to everyone. And it's much, much worse than that. It's much, much worse because 40 years ago at McKinsey, we did work for Yale and for the Harvard Endowment. I was in the corporate finance practice. And I did projects for the Bechtel family and for Candover Electra in the UK, and for the largest single family office in Europe, and for NatWest Coutts. And 40 years ago, we knew the optimum portfolio theory was wrong and that it was all garbage. And it was all garbage because the data set that the global wealth advisors use doesn't include the data for the highest performing assets in the world. And so the optimum portfolio is by definition a suboptimal portfolio. And we knew 40 years ago and longer that the highest performing assets in the world are private investments. Early stage and mid stage venture capital, early stage 30% net IRR per year over the last 25 years, mid stage 15 to 20%, late stage 10 or 11%, not that different from the public equities return. But that's the reality. So the challenge is those are inefficient markets and there is no data, and the large asset managers therefore can't run that data through the optimum portfolio model, so they exclude it. Now, we're at a business school, so we were all taught, Lou and I were at business school together, we were taught that efficient markets don't generate superior returns. Superior returns could only come from inefficient markets. So the absence of data is a good thing, because it means it's inefficient. And if it's inefficient, you can get superior returns. So surely the world's wealth advisors would say, seek out the superior return, but they don't. They say, seek out the inferior return and we'll put costs on top and burn up the return. And that's what they do. And furthermore, to be honest, they don't want your assets leaving their platform. And the only things they have on their platform are public equities, fixed income, large cap real estate, and certain alternatives, typically hedge funds, that trade public equities and fixed income. That's what you're going to get. And so that's the biggest single problem in the industry. Put up your hands if you would prefer to have access to the highest performing investment categories in the world. Of course you would. And would you like it to be easy and simple? Of course you would. And would you like it to be efficient and low cost so it doesn't burn up your return? Of course you would. You don't want the dead weight loss of an inefficient old system to burn up your return. But that's what you're getting today. And everyone else in the world is getting that too. So that's the first point. That is the single biggest problem. We've known it for 40 years. And honestly, the industry hasn't tried to solve it. That's the truth. So now, second point. What's the genesis story of Linqto, and why did we pivot it in the way that we did? So to pick this up, let me give you a little bit of personal background. So after those years at McKinsey and then running the global financial group at Carney, Alison and I went into industry. She became the CFO at Barclays Global Investors, the world's largest asset manager, and the head of strategy there. And the last project I ever did for Carney was with BGI to launch what became iShares. I did the strategy. Alison incubated it as the CFO and head of strategy with Lee Cranefuss, ex-BCG, someone, very smart guy. And it was a very simple thought. We didn't take on access, so everything I just talked about was access. We took on cost. And the thought was a very simple thought. Barclays Global Investors created institutional ETFs with 50 basis points of cost for institutions. And we said, isn't it awful that mutual funds have 3% loads and 1% to 2% annual cost? They're burning up the return in overhead cost. Why don't we do this? We'll take the institutional ETFs and we'll make them available to retail customers and we'll brand it iShares. And let's just see what would happen if we did that. We asked Morningstar to rate all the BGI institutional ETFs as if they were retail mutual funds. And of course, they all ended up 5-star. And that was the light bulb. Because then what we did it. And today, iShares is $3 trillion. It is the largest branded product in the world of any type. Because your capital will flow to the highest return if it's made easy to access, and iShares is ubiquitous today. So we had just done that, and we looked at each other and we said, well, that was sort of fun, But how do we get access to the best investments in the world? Which is early stage venture, mid-stage venture in technology. And I said to Alison, because we were in a fortunate position by this time, I said, I'm going to figure that out. I'll go on that voyage. And I joined Band of Angels. I joined Keiretsu Forum. I helped Brandy and team build the world's biggest angel group. A number of you are members. I did other things. I worked with Google to set their global innovation strategy and figure out how does innovation happen, because I wanted to be able to access it and take advantage of it. And I learned some things. And they are important for this conversation. And one of them is, early stage is not just about access. Early stage is sort of complicated, because you need access, you need asymmetrical information, you need to be able to invest with the best investors, you need to be highly diversified, and you've got to do great due diligence. It's sort of complicated. But that was the voyage I was on, because I wanted the net 32%. And so in the end, Alice and I said, we can't do that across too many technology sectors. And we said, we've got to pick one. We'd be doing internet, fintech, and digital content. We've got to pick one. And so we said 100% blockchain and fintech. And we've done that ever since. And today, blockchain co-investors has the world's highest performing fund of fund, according to Preqin and PitchBook. We have a direct early stage token fund, and we have a mid-stage growth fund. And we did that for a reason, because early stage technology is the highest performing asset category in the world, but blockchain is the highest performing sector within the highest performing category in the world. We didn't pick it lightly. We're digitalizing all of the world's monies and assets, and you're going to hear much more about that in the next 2 days. So that was what we were up to. And then along came Bill Saris and Linqto. And Linqto and Bill Saris presented at Keiretsu. They wanted funding. We gave them 2 or 3 million, I think it was. And they were building apps for banks. They were building mobile, easy-to-use apps for banks. And it was pretty impressive. But I thought about it, and I said, this isn't going to work. It's not going to work, because the banks don't want you to have easy access to assets off platform. It's not really going to work. So I went to Bill and I said, Bill, we need to pivot Linqto. We need to pivot Linqto to be a direct access channel to the highest returning investments in the world. And then I said, but and Bill said, okay, let's do early stage investments on Linqto mobile app. And I said, Bill, that's sort of complicated, because early stage is not just about access, it's about access, information asymmetries, privileged access, due diligence, and a bunch of other things. So, but the good news is, mid-stage emerging unicorns is something that you can invest in through access, because anyone can Google Dapper, Abra, Ripple, Uphold, Coinbase, Robinhood, and get enough information to feel like they're making an informed investment decision. Price, be careful on price, but you can do your own due diligence around the quality of the companies, because they are real businesses, they've got traction, they're growing fast. So we're going to pivot Linqto to be easy access to the world's most attractive investment category at a reasonable cost. Personally, I'd like the cost to be lower, because we come from the Walmart iShares mentality. Take out the cost, drive up the return. Sorry, Karim, for saying it. But it's still reasonable cost. Linqto is cheaper than VCs would charge for you to access that product. So it's reasonable cost. All right. So then Bill said, can we use the name Linqto? And I said, it's a beautiful name. I'm the former head of marketing globally for Gap. It's a beautiful name. Why? Because it links you to what you just said you want. Access the world's best investments in an easy, simple way at a modest, reasonable cost. So Linqto was great. But I said, they may not get it. We need a tagline. And I said, call it, what is it called? Thank you very much. Private investing made simple. And it is. How simple is it? I need a dummy product. It's all right. You take your mobile phone, after you've downloaded, one time you go through KYC/ML, you click on Linqto, you click on the product button, you scroll up and down, you pick one, Dapper Labs, you decide how much you want, and you click buy. Now, in financial services, it doesn't get any easier than that. And we worked on that UI, UX, and we tried to engineer it to be simple and easy to use. And I think it is. Is it perfect? No, but it's better than anything else. So that was the pivot of Linqto to Coinbase for Unicorns. And that is sort of where Linqto currently is. And it is remarkable. And I don't think people appreciate how remarkable it is. Because the combined resources of BlackRock with 10 trillion, and Fidelity, and Vanguard, and Franklin, and Putnam, and Bank of America, and Wells Fargo, and Santander are not delivering what little old Linqto is delivering to investors who only want high returns in exciting business in an easy, simple format at low cost. This is a very special little company, Linqto. Third part, part 3. Let there be change. What needs to happen next? 3 things need to happen next. And before I go there, who's having fun in Portugal? Yay. Everyone's having fun in Portugal. Like me, do you feel the gratitude and appreciation for Linqto? Put up your hand if you feel a sense of gratitude. Yes, everyone. And so now there's going to be an ask. It's not a Linqto ask, it's a Matthew Merle ask. And it's not a lot of work, but it's coming. Here it comes. There's 3 things that need to happen with Linqto. They're the same things that we talked about a year or 18 months ago, actually pre-COVID. The first is we need massive traffic. There's 3,000 funded accounts on Linqto. We need massive traffic. The second thing we need is product breadth, because all of you look at the 15 and you wish it was 50. And we all do. We all do. We all know that. And they need it to be able to cross-sell to you, because it turns out about 80% of Linqto users only have one product. So if they had 2 products, it would double the size of Linqto. If they had 3 products, it would triple the size, but product diversity and breadth will create more cross-sell and more larger basket size. So we need product breadth within the narrow confines of what can be delivered accessibly, inexpensively, and with you being able to make an investment decision without relying upon deep due diligence. And then the third thing that needs to happen is a little bit more subtle. We made a choice at the beginning, and we discussed it, that Linqto would be buy and hold. Okay? So that's what venture capitalists do. They buy, they hold, they wait for an exit, they get liquidity. They do buy and hold. They don't trade. However, there are times when buy, hold, sell is better, because we all need liquidity occasionally. Maybe you have to sell something. Maybe you just think the grass is greener over there, so you want to sell over there to buy over there. So liquidity is a positive thing. So buy, hold, sell is better, but it's very complicated. The great news is the brilliant minds of Linqto have figured out a pretty cool approach to buy, hold, sell, and they're now working on it. So these are the 3 things that need to happen. Massive traffic, 10x the active accounts, which will afford Linqto to hire people to create product breadth, and that in turn will open up buy, hold, sell. Okay, now, where do you come into all of that? Just before I go there, how many of you are actually investors in Linqto? Actually, a lot more than I expected, about half. So this is even more true for you. And by the way, everyone else could be an investor. You'd click on the button, find Linqto, swipe, and buy. It's that easy. However, for all of you, we began with 2022, and this is a very simple ask. please introduce Linqto to 22 accredited investors in 2022. That's all I'm asking. Do not tell them to buy anything. Do not promote any product. Just show them and say the following. It's as easy as this. Say the following. The world's financial wealth advisors are not giving you access to the world's highest returning investment opportunities because early stage and mid stage technology is the highest returning asset category in the world. And I've found this really cool little app. Let me show you. I click on it, I go up and down, I pick a company, Dapper, I decide how much I want, and I press buy. And by the way, you can abort at that moment. You don't actually have to buy. I do it a lot. So you can go through the whole process, and then up goes my Uphold account. They see it's one of the accounts, but one of my Uphold accounts pops up, and they see I have Solana and Bitcoin, and I say, look, I could buy it right now, but then I back out. It's that easy. Don't tell them to buy anything. Do not promote any investment. Just show them how easy it is. And if 2 out of your 22 activate times 150 people, will make a serious increase in the scale of Linqto. And for those of you who are not investors, that will allow Linqto to provide more product breadth and maybe even take out some costs and activate buy, hold, sell, and you will benefit. That will be great for you. But for the investors in the room, if we 2x the active accounts, if we 2x the basket size, and if we activate buy, hold, sell, I believe, no guarantees, no predictions, I believe that your investment will 10x. I do. And I'm an investor in Coinbase, Abra, Kraken, SFox, Amber, and all the other digital wallets and digital marketplaces, and they're all focused on something else, crypto. This little company called Linqto is unique, and that's why it will 10x if you just do what I asked. Just 2x the traffic, they will 2x the product diversity, which will make you, it will give you the opportunity to buy more, and then they will activate buy, hold, sell in an active liquid trading environment, and we will 10x the value of your investment. And I think all that can happen this year, if you do 2022 this year. So taking it from the top, just one last time, and I'm actually early, just to take it from the top. We've known for 40 years that the world's most sophisticated, well-capitalized wealth advisors and managers have made no attempt to give high returning investment opportunities to their clients. And instead, they have chosen to take a lot of fees for delivering low returning investments that destroy your family wealth. And 40 years ago, we told them that, and they did nothing. And it became personal. And Alice and I launched iShares to kick them all in the teeth, and it destroyed the 3% loads. And now we're doing it with alternative investments. And this is one of the platforms, and Coinbase and Kraken are doing the same thing. And Alison sits on the board of Silicon Valley Bank. The CEOs of Royal Bank of Scotland, NatWest, Barclays, Santander, Nathan Bostock are friends of ours. And I tell them what I'm telling you. It's time to change. Let there be change. Thank you very much.